Okay, so let's start the today's session. So yesterday we were discussing about three M's, and we have discussed about how to determine entry, exit, and stop loss, and few other points. So today we are going to focus on uh, two additional concepts like money management and mind management. So these will be two additional discussion topics, which is very important before entering into the real stock market. And again, based on my experience, I have collated these guidelines of some of the rules, and which I thought that okay, it will be beneficial for everyone to know and understand. Okay, so the first point under money management is that as an individual investor or trader who are coming first time to the stock market, they need to be very clear about like how much corpus or how much amount of money or their saving they need to put into the stock market. And this is the it's kind of a standard rule I found. Okay, so that is with they said that uh, subtract your age from 100, and that whatever the percentage is that comes, that should be your total capital that you should be putting into the stock market. Okay, so it's like for example, somebody is having 1 lakh for investment purpose, and then the age is, for example, 40 years. So the maximum capital they should be putting out of that save. It's not total saving. It is a saving for the investment purpose. So for example, 40 years means that maximum 60% of that amount should be uh, should be invested into the stock market. It would be maybe trading or investing. But remaining 40% should be invested in other areas, maybe mutual fund or some other gold or property, etc., etc. So that is some standard rule which I researched and found. And related to number of companies. So I think
Sachin,
yes.
won't mutual fund come as stock market because it is ultimately dependent on the stocks, right?
Yes, absolutely. However, in mutual fund, uh, as an individual investor, we are not doing anything. We have just selecting as a
Yeah,
mutual
but
fund.
ultimately the money will get impacted. Our investment return or investment, even the investment itself, will depend on the stock. So the risk part.
Yes, it's correct. You are absolutely right, Mahisha. So that's the reason what I'm saying, that whenever any individual is selecting a mutual fund, so they are looking at their history. I mean, normally any mutual fund company, they shows their history, like since last 10 years or 15 years, they are providing return on an average return of maybe 10 to 14% and so on and so forth. And even after showing those historical data, there is still a risk. That you're right. But what is the difference is when we are um, kind of giving that authority or responsibility to someone else who are investing on behalf of us. So we don't have any direct interruption or direct involvement into their investment. It is based on their historical data. We are just relying on them. Okay, they are mostly going to give us that much money, but ultimately they are also going to invest in the money. And in practical scenario, if market will be really really bad, okay, then the risk is always with the investors. But when it comes to the stock market, I mean, so so the recommendation is that maybe up to 40% we can choose is the mutual fund or property or gold. Up to 60% of the investment saving we can, I mean, not 60%, but depending on that example. If somebody age is, for example, 60 years of age, and then he's in that way, in that condition, he or she should be investing maybe only 40% into the stock market, and 60% should be other way. So this is just recommendation from based on my research. Okay. And and again, this is not related to any technical analysis or so, but because maybe most of us are the new to the stock market, so I thought, okay, these some of these suggestion or guideline will be helpful for them when they are uh, you know uh, entering the stock market, because some of my friends are there. I mean, they have done many mistakes by without learning, and some of them, yeah, they made very good money based on some tips and all. And later on, they invested their maybe most of the capital in the stock market, and in that case, some big losses will also happen. Okay, so based on those learnings, I have made, I mean, collated these pointers or the guideline, and I'm just sharing with you for the benefit of newcomers to the stock market. Uh, okay. Uh, so I think there was another initially somebody asked the question about how many number of companies should be having in the portfolio. Um, so to answer that question, it should be maybe five and to maximum 15. Why 15? Because any point of time it will be very difficult to manage the number of companies. If there will be a lot of companies in the portfolio, it will be very, very difficult to manage them, which one is going up and down, somebody we need to take a exit, etc. So I start with maybe a 3 to 5, and maximum we can you know uh, add more companies, and then maximum it should not increase more than 15, otherwise it will be a very, very time consuming job to manage that. And if any point of time, if we needed, maybe some of the position we can exit and enter some new companies based on the research. Okay. And the distribution means from the money perspective. Okay, for each uh, companies that is we are choosing for our portfolio. So uh, money point of view should be around 8 to 20% of the fund should be distributed to each company. So again, it depends on the how many number of companies. Suppose if we are choosing maybe 10 companies for the portfolio, and then maybe it will be 10% against each we can distribute. uh, and next point is related to the stop loss. So even we are choosing suppose more than 5 companies or maybe 10 companies. So for individual stock, uh, that stop loss or the risk, you can say, should be always maximum 2%. Okay, so that is the that so while taking the trade or investment, we should be distributing in such way that, okay, not more than 2% of our money should be on the risk. Right. So in that way, and like why this is important, especially considering the newcomers. If somebody is having the 10 stock, then in that case, suppose all the 10 stocks or 10 trades are going against us. So maximum loss will be more not or less than 20%, maximum 20% only for any point of time. Okay, so that is the reason for a newcomer that, okay, this is recommended that, okay, they should not be putting more than 2% of their total investment on the risk. And especially few additional tips for a day trader, if somebody wants to.
So this is just your ballpark, or your thought
Yes,
process, or it is something that people follow, or this is just your rule for yourself.
it is based on my last couple of years. This is what I have learned and researched, and most of my mentor also suggested in a similar way uh, to have that. So something are already I just borrowed from my mentor, something based on my own experience I have added.
Okay.
Especially considering the newcomers. I mean,
Okay.
there are a very, I can say, very successful investor in the Indian history who has kind of sold everything and invested in the stock market, but those counts will be very, very less, because this is the market we are going to enter for a long period of time. And as I keep on saying that, okay, uh, money in the stock market is equivalent to life. So if you lose money, that means we are losing the life. So it is important to save the life, or maybe if I take the analogy of the cricket, it is more important being on the on the crease rather than hitting the sixes. I mean, if we are on the ground, there is a higher possibility that okay, we can hit the fours on sixes. But if we are now out of the game, then we cannot do anything. So that is why it is more important to save the capital and wait for the right opportunity. There are a few more points that we are going to discuss in the subsequent slide. That will be, I mean, that will add more
So,
clarity.
on some days,
Yeah.
the market just collapses
Mm-hmm.
because of some news, like, say, for example, the Russia-Poland war, the Russia war, or this kind of news, or something like the bank-related thing which happened in US recently. So, then the market will just collapse on that day. So, does it mean that you sell off all your stocks?
So before collapsing the stock, anything, I mean, even uh, like for example, the war, that situation will also not happen. I mean, all of a sudden, that is kind of a lot of preparation or information is already there. Okay, for example, if you take the recent cases of Russia-Ukraine war, the war is started maybe after a couple of months in before the actual some tension started, right? So before collapsing in real time, in the chart it has already started showing some symptoms, some of the indicators. So based on those initial indicators, we should not wait that okay till the time it goes it collapse. Maybe we can take the decision in advance as an investor, because sometime what happens, okay, those points I'm going to cover in the coming slide, but because you asked that, sometime we fall in love with the stock for a particular company stock, and then
Like Infosys for you?
possible, correct. It could be Infosys, it could be the TCS, it could be Reliance, it could be Adani, right? So people fall in love with that. Okay, they say, okay, then no, I will hold it. uh, However, if we follow the principle of technical analysis, the chart will already show some of the symptom, and based on those symptoms, we can simply take a position. Take a position means take a call that okay, yes, exit for that point of time, and wait for the right opportunity, and maybe make a another end. So here, I'm not telling about the daily basis one. I'm telling about the for a medium to long term investment. If you are just maybe just spending a 5 minute, in a day or sometime in a week also, even the market collapse, even if for a big company, it takes a time. Sometimes it takes uh, from a couple of days to couple of weeks. Okay, so and maybe at least a one time we'll get a chance in a week or in a 2 weeks to look at those stock, and we can take the decision there itself. So those points, I mean, we are going to discuss, and I will show you the based on the historical data that okay, before something actually get revealed into the market. For example, either the India lockdown. Okay, before that lockdown started, the market started collapsing. There was some simple symptom, very clear symptom into the chart. In the chart was shown. Based on that, individual could have taken the decision. Same thing also happened in the Adani stock also. Before the actual news came to the market, those symptoms are already there in the individual stocks. So I will try to show you as much as example possible. But before that, I thought of covering some of these principle, so that when we'll enter into the market, maybe we can just recall that whatever we have discussed, and I need to spend lesser time on explaining these pointers. Okay, so please be with me, allow, and we can. I mean, I'm very much open to even discuss on these points one more time. But if I can cover that, I believe that okay, 90% of your individual questions will get automatically answered. Okay, yeah. So few additional tips for a day traders. Day traders means someone who is maybe taking the entry in the morning and exiting maybe any time on the same day, maybe after a few hours or after some minutes or few hours. Okay, so that is the day trader That is a day trader example, right? So even for the day trader also the same 2% rule applies for the each trade. Maybe if I'm taking a trade, for example, maybe 10,000 rupees, so maximum risk I should be putting, that is the 2% of the total trade value. Okay. Same time that, okay, maximum monthly loss. So when we are starting, it is important to maintain the trading log, maybe a Excel sheet or whatever we are individually comfortable with. We it is recommended to maintain those trading logs initially, and for any particular month, the trading loss, if it is happening, that should not exceed more than 8% of the total portfolio value. So somebody is suppose making the portfolio of 1 lakh rupees. So maximum loss for a month should not be more than 8,000. If that is the situation, then we need to relook kind of introspect the method, or maybe we need to revise ourselves. Something is wrong we are doing, right? Or there is a very very rare scenario that, okay, the market is really really kind of a uh, fluctuating situation, like some war or something. So that is anyway will be a publicly known, which is very rare maybe phenomena. It happens maybe once in a 10 year or 15 year or so. Otherwise, in most of the normal scenario, there is something wrong in the process or method. So we need to review our own system or the method that we are following for those trades if there is a continuous losses of that, right? And and the one final is kind of based on my experience that uh, if there is a um, if someone is losing into the market like maybe more than 8% or 8% for a consecutive 3 months, maybe this is very rarest opportunity. I mean, rarest scenario. That means maybe they, for that person, it is recommended that, okay, maybe a stock market is not meant for them. I mean, they need to look for something else. Okay, so that is also maybe one rarest of the rare scenario. It might also happen. Okay. So if it is a continuously many months for a quarter, it's the same thing keep on happening. Then even after reviewing the individual learnings, the method or the process they are following. So if it keep on happening, so 8% maybe it's my maximum loss. I mean, loss will happen. What if, I mean, 8 into 3, 24, 25,000 or 25%. Still, we have big capital left, and that person can think of doing something else with that money rather than unnecessarily uh, wasting or losing the money into the stock market. Okay, so these are some of the few principle or the rules related to the money management. A few pointers related to the mind management. Okay, so sometime what I have seen when some of my you know known or the close friends that, okay, they think that, okay, they can control the market. Okay, sometime we start printing the candle. Okay, next candle will print like that, or will appear like that. But in reality, that will not be. Market is controlled by market itself, and market is the very big, very strong, I can say, set of people, or very strong set of individuals, or the high net worth individuals are there. So either this is managed by the big organization or big banking system, or a big INI individual who have very high net worth, or the big investors, right? So what we can do it, we can try to find out who are the most impactful forces in at that particular point of time, and then we need to align with them. So what is our in our control as an individual investor or trader, that we can decide the entries and exits depending on certain uh, um, method or the principle or the concept we have learned, right? And to preserve our capital, that is the in whatever we are doing the investment, and how to manage the money. Okay, these are the kind of largely four things are individual control. Okay, so if, for example, if market is not going as per our prediction or speculation, we can decide to take an exit immediately before just living on the in hope, right? So that in that way we can preserve our capital. At the same time, money management, we have just learned that okay, uh, there we should not be investing or trading more than a specified limit for any particular stock. So it's, once we are we are habitual with that, it is like a uh, we are teaching maybe a some teenager to ride a motorbike or a scooter. Okay, so general rules say that okay, don't do over speeding. So once that particular kid has enough practice, maybe a month or 2 month or 6 month, and we know that okay, now he or she can drive well, then we don't need to provide that instruction. But somebody who is taking the first time the bike and learning it, it is always recommended that okay, don't do ever speeding, because I mean there is a high possibility that okay, some obstacle or some sudden object will come. There is a high possibility of meeting the accident. It is not like okay, he or she will meet the accident, but to avoid the possibility, that is a recommendation. So same thing is stock market. Somebody is entering the first time, it is always recommended to have the the proper distribution of the money and follow the entry exit rule rather than following, I mean, living on the emotions. So that will in long run we are going to survive. And if once we are survive for a long period of time, reasonably long, then there is a higher possibility that we are going to sustain or make money. What are the some of the self inflicted pressure, right? So sometime when we enter with lot of hope or the results basically. So our results is not in our control. What is in our control is that the following the method and principle what we are learning. So these pressures like okay, I'm some people individual things that okay, when I'm entering, I should be succeeding from the day one or from the first trade itself. Uh, in practical scenario, may or may not be possible. Some, I mean, maybe whoever is participating in this discussion, we everyone have learned maybe driving two-wheeler or four-wheeler, maybe especially taking the example of two-wheeler. It is very unlikely that okay, we have not fallen down. I mean, as an individual, when we started learning the driving, definitely maybe some small slippage or skidding might have happened even by the while riding the bicycle or while riding the scooters. So same thing will also happen in the stock market. So when we'll start taking the trade, the market is very unlikely that okay, market will immediately start moving in the direction we want. Okay, so it is when we learn about the system, then we also need to follow the system that okay, yes, till what moment we need to wait and when we need to do the exit. Right. And the pressure is okay, maybe we can feel that okay, stock market is for the making a quick money, which is not true. Stock market is kind of any other business, right? Like investment in the property or the gold or any other investment. So following the system is much more, I mean, is equally important here also, right? Um, many a times also individual things that okay, now I started making the money maybe after 2 to 4 months. It's taking, let us quit the job and do a full-time trading. That is also not recommended. Okay, so if we can't do something while doing the current job, it is very unlikely that okay, we can do the same thing after leaving the job also. So uh, spend maybe sometime 6 months and 1 year or even more than that. If somebody started making a consistent profit or money, then after that they can take a call that okay, if he or she wants to take this a full-time profession. Okay. Sometime people enters into the market by saying that okay, maybe very quickly they want to double the money. So it's not like a magic or game. Okay, so it might happen. You can able to make them maybe double or triple also. But more important is the expectations should not be like that. Expectations should be on following the system and the process that we are learning and we will be learning. Uh, and trading on borrowed money. So uh, last last month I was discussing. This is a very recent example. One of my friend in the we play badminton. Okay, so somebody was talking about, okay, he started the stock market, and some of his cousin was there in the stock market providing the tips, and based on his tips he borrowed maybe 1.5 lakhs of rupees during the in beginning of his career. And after 2 3 trade he made very well. Again, he got a confidence, or I can say overconfident, and he borrowed the money, and his 80% or 90% capital are lost. He was doing the options trading, right? And till that, and again he was just relying on tips, and he was burned so much that, okay, after I can say 8 9 years also, whenever somebody discuss about the stock market, he say no. Okay, so that is the another kind of mistake kind of we do um, with the stock market. Like we borrow the money, we rely on the tips, and we start doing the tips. And if I share the like this concept of tips, it is very 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 kind of a easy way of doing the business. So typically what they do that, okay, maybe for example they collect somehow 1,000 or maybe 1,000 contacts, and they divide those contacts into the 50-52 parts. So for they choose any stock, or say maybe a index, let's say bank nifty. So 500 people, half of the, you know, uh, that community, they say that, okay, market will go up. Remaining half, they will say market will go down, and something or other it will happen, right? So whichever way I mean, that market goes, so they leave the other 500 and carry on with the rest 500, and again divide them into two parts, right? So 250 and 250, and again they do the same thing. One set they will say that, okay, market will go up, and the set market will go down, and again same thing will happen, right? Either market will go up, or so they have always a probability of 50% correct. And at the end of the couple of iterations, they will have around 100 or maybe 50 you know left, who are ready to pay them for the tips purpose. So they will charge maybe 10,000 or 20,000 depending on the individual negotiation, and they keep on providing the tips unless and until somebody really badly get burned based on the tips. So that is how that these tips markets are doing. I mean, because when you start opening the trading account, after opening a trading account, automatically you will start receiving the call from those tipsters, right? So simple recommendation is that, okay, do not rely on the tips. Learn your own methods, maybe whatever we are learning together, and on top of that, once we have learned on a fair enough, you can try learning more and more. I mean, there's endless, but whatever I will be sharing, it will be a I mean, sufficient or more than enough to start with, and on top of that, I mean, there is no limit of learning, right? So one and there's for the mind management, like money does not makes the traders, right? So people thinks that, okay, if I have a lot of money, then in that case I can able to make the lot of money. That is not true. So basically, it's the traders that can make the money. So even somebody can start maybe a 5,000 to 5,000, 10,000 also, and still they can able to make a good money. So if somebody have the small capital to start with, my recommendation would be start with the currency, especially USD INR. So 5,000 or 10,000 is enough amount to start with the currency trading. Maybe on an average, individual can make maybe 2 to 5,000 uh, average of per day, also based on just 10,000 of investment by following the process. Okay, so um, few M3 rules, like, okay, money method mind, that um, you should not be counting your profit unless and until you are in the trades. Okay. So you start first of all. I mean, when we start learning, and then people say that, okay, I have predicted this one, or I have told this one that this is going to happen. that will be maybe a good for the paper trading or when we are learning. So once you are in the real stock market, then you can think about, okay, how to know it is a profit or you are in loss. Confidence, or I can say overconfidence, can kill. Okay, so whenever sometime what happens that, okay, whenever we are in the trade, uh, maybe we will be sometime really excited and we start doing the over trading. Okay, so we should avoid doing that. So maybe once we, for any particular day, if we have made some profit, my recommendation would be uh, leave it, leave the trading for that day. Okay, just relax, have a tea or coffee, or maybe do something else. Stop trading for that day. Same thing, if any you lose for that day also, then also you can stop it. All right. So just take it as trading or investing, as a normal, be other kind of work, which is not like if we are lacking something or we are getting something, let's start doing more than needed. And again, don't increase your risk after winning the trade. So it's the same thing, right? So once we win the trade, still we need to follow the same rule, like 2% of risk. And one recommendation is that whatever the profit that you have made, your your risk should not be more than that maximum risk. If you want to take it, maybe if you somebody is really courageous for that day, so the maximum risk that you should be taking should not exceed your profits. Okay, so or the best recommendation is that once you made the profit for the day, simply close your trading terminal and do something else. um, and again, stop loss should be based on the charts, not on the um, kind of a money management rules. So I mean, when once we start looking at the charts, so there will be a certain indicators or certain rules that, okay, based on that we are going to put the stop loss. Right. Ride your winners. Okay, so don't jump off a running horse. So what it mean that many a times I have also seen that whenever we are into the losses, we be in the trade. I mean, we wait that, okay, something will happen, and you know, and it's kind of, we started living in the hope that, okay, something is going, some positive thing going to happen, maybe today or tomorrow or someday. Okay, in the reverse way, when we are winning or when we are making the money, or when it is the market is going in the direction we want, we kind of exit the market in a premature or before it is needed, like so. So what I mean to say that whenever you are making any entry or exit, it should be based on the system that we are learning, rather than by looking into, okay, number, how many profit we had, and that's the exit. Okay, if we are winning, let us win till the time your target, that defined target, gets hits. Or maybe if it is going an other way around, or maybe negative direction, let's say a stop loss also hits. Okay, so in both the condition, let's follow the process and do the exit or entry based on the system, rather than deciding based on your at that moment or whatever mind is thinking. Right. Other point is that, okay, if maybe for a weeks, or for 2 weeks, or for a month, it's like the way we take the salary. It's a similar way that, okay, whatever the profit is coming into the trading account, withdraw the money and maybe put some other investment, or maybe you withdraw it, put it bank account, do some other investment, or trading profit, put it to some long term investment. It's not like that, okay, for a 1 lakh rupees we are doing the trading, and we have earned a little bit amount, and then we are trading with the extended amount or bigger amount. Let us fix the 1 lakh rupees. Okay, this 1 lakh rupees I'm doing the trading, whatever the income will be there, I will put in some investment, or maybe long term investment, by purchasing some stocks of maybe of good company, or wait for that, okay, uh, that some company that is coming at your level, and do the long term investment. So main thing is that, okay, keep on withdrawing the money rather than keep on reinvesting your uh, profits, right? And the last but not least, like don't expect every trade to be a big winner. Sometime we may have the in a very minimal, sometime average, or sometime big also. Okay, so it will be combination of all three possibility, and sometime in a minus also. So it could be any situation. So do not expect that okay, whatever will be your trade will be a big trade every time. Okay, because what will happen if the expectation will be like that, uh, without any you know uh, I can say without any base, you will be not happy with yourself, and which will be kind of an injustice to yourself. Okay, so this is very important. Know that okay, since if you are aware of okay, that okay, since beginning that okay, someday there will be a big trade, or sometime there will be a medium income, sometimes there will be losses. So it is a market. Anything can happen. Okay, so we need to train our our mind, or become habitual with that kind of experiences, because when whatever will happen that okay, even I have felt that example, like when I started uh, learning and I started trading, it is very difficult to get out of the trading terminal and keep on looking at the chart, what is happening, what is not happening, why it's going up and down. Okay, it may happen, it is a very normal phenomenon. Okay, so maybe initially start with one or two trades or one or two stocks, and then um, have that experience of plus and minus by looking your, have the experience of looking at the trading terminal. It could be sometime maybe plus, maybe in the green, sometime it could be minus also. So that emotional status, we need to go through that, and it will take couple of iteration, and after that you will feel normal. Okay. So yeah, so that is the I can this is and the representation I thought of sharing with you. So a typical state of mind when somebody is entering the market, it will be like that. Okay, lot of green, red, and the things are keep on coming. Right, lot of thoughts. But what we wanted to achieve, okay, from the mind perspective, that it should be very clear. Maybe uh, even we have a limited stocks or limited trade, whatever is there, there should be a clarity. Okay, what is going, or which one will happening, good or bad, and based on that we'll make the exit and entry, rather than lot of thoughts and plus and minus emotion going to the mind, right? So okay, so it is as the same thing. Winning in the stock market is a matter of skill that we are learning. Okay, and the implementation of the same thing also, and after implementation, adopt the adoption of the right. So once we implement it and finally we have adopted, the adoption means that it should be become as part of your habits. Okay, those uh, skills, the process, and the disciplines. It should not be, we are not relying on our luck. Okay, for this particular today, maybe my luck is not good. Maybe for that day, it's simple that okay, the market didn't went as per our expectation or the speculation or the prediction. So just simply accept that as soon as possible, exit your trade and be relaxed. Next day or next week, just you know keep an eye on that particular stock, and then when it is reaches your price point or your system, then be ready for the trade. Okay, so few extended rules of the this trading game, right? So follow what the market is doing, not what you want the market to do, right? So that is the another state of mind, that rather than we we keep some expectation that okay, today market will happen like that. Okay, and what we should be thinking that okay, we should be kind of a looking at the market and observer. Okay, and then see what market is doing. If market is going to be a bearish, then become a bear on that particular day or that particular hour. um be ready for selling or the sorting. And if it is happening in the market is going up for any point of time, if you are day trader, then be with the markets, and then ready for the go long or the buying the stock, right? So what is what is the conclusion is that as an individual trader or investor, you don't decide, okay, today I will buy or sell. Latest charts show those patterns or symptom on the real life data, and based on your analysis, you become or you get aligned with the market, right? So if the falling market is be beer, if the uptrending market, you can become a bull. Like that means you should be ready for the uh, buying, right? Yeah, one very important, whatever I have highlighted in the red, so that is very, very important. Ignore the news, right? So lot of time what's happened that uh, I mean, mostly especially in the stock market or any news that comes late only. I mean, no matter if people are shouting, this is the breaking news, but especially the stock market, all the news are uh, very, very late for a trader like us. Lot of things decision has been already taken. People have already taken the position. If something is coming in the news, so never ever trade based on the news. So if we needed to do something, maybe there is another strategy, but for the trading purpose, never ever rely on the news, right? So in general, if you need to do something, in general, whatever the newspaper or the G business or any stock related news is coming to you, uh, is you should not be. I mean, if you first of all, you should not be relying on that. If you want to do really something for that particular day, I would suggest that, okay, do exactly opposite what news says. Otherwise, simply don't do anything based on the news. Just do the analysis based on the learning what we had, and then you can take your call rather than following the news and doing based on the news, right? And next one is again a repeat thing, but trade trade the trend. I mean, trend means we have already learned what is meant by trend. So whatever is the trend says based on the Dow theory or the other indicators we learn. So trade based on the trends, okay, and the your own analysis or the whatever learning we had, it will help you to understand if the trend is uptrending or downtrending. Never let your profit turn into losses. That, okay, what it mean? Um, Sometime again it is a um, same mind management. Sometime when we are making a good profit or we made good profit for that particular day, we tend to do over trading. That, okay, maybe some of us in this group also, if they have already started doing the trading, and um, they can understand what I'm trying to say. So it is a normal phenomena. Even I have also done the same mistake when I started a couple of years back. That, okay, when we uh, kind of make some money or some good money, we try to do some more trades because our minds are really, really excited. A lot of dopamine has been released. I mean, because of that profits. And then with that excitement, we do the mistakes. So that is the reason, a very simple rule that if you made some money in that particular day, stop trading. Even same rule is also there if your stop loss has okay. Uh, Follow stop losses religiously without being emotional. So that point you just keep on repeating, but it is again very, very important. Whatever the system, as per the system, whatever the stop loss is says, based on that, simply follow that. If it is, if it is either you can put the stop loss directly into your trading system while placing the order itself. So stop loss option, you can put the stop loss and the target both. So automatically when it will reach to that level, it will automatically exit. So it is or if you have not put a stop loss, for example, as a long-term investor, it is so in that case, keep an eye on those stocks, and if there is something negative is happening or the stock is not moving based as per your predicted direction, whenever there is a level of stop loss, whatever you thought of before doing the investment, just exit the position and maybe wait for the right moment, or maybe I can say wait for the other stock to invest or to trade. Yeah, next point, study more and trade less. Right. So um, again, so study more means it is not like always you are keep on repeating whatever we are learning every day, watching the video. It's basically that keeping an eye on those charts. So maybe for example, we have selected a couple of stock. For example, I have maybe my favorite stock is silver, and then and there are few more stocks are also there, like banking stock and pharma stocks are also there. So I just now look at for the 5 minutes for on that particular day and then leave it. Like some of the stock I have sold after 6 months or 8 months. For example, ICICI. So ICICI I sold after 8 months or so, and after 120% of profit. Similarly, the Asian Paint I have done. So I have Asian Paint I have maybe sold after 7 months. Okay, so that was around 96%. So these are the so every not every day, maybe after a couple of days, I just look at the chart and say that okay, this is my kind of a position or my target, and whenever it is trading nearby that, I just put in the trading system for the selling purpose. Right. So study more is the example is a meaning that one. Okay, keep an eye even if you are not trading. So, okay, so that is the example of study more and trade less. Okay, and another thing is that sometime it is possible that okay, if you don't able to identify what exactly going on, this market is up or down or sideways. Okay, so in that case, and initially our mind will force us to okay, take the trade or take the trade, something like so. In that situation, if you're not very clear, it is very simple. Don't do anything. Just wait and watch, and maybe for that day or after a few hours or after a few days, the market will show the symptom which will be very clear to us, and then you can take the trade. So the patience is very important. Like general things about tips, right? So tips are generally to trap you. Okay, so if if by any chance, okay, maybe you are getting a tips directly, indirectly, friends or by someone. So in general, do not take the tips. If you really need to do, use it for your advantage, right? Or maybe, or I can say simply don't trade based on those tips. Yeah, next point is never put more money into losing trade or investment. So I think yesterday somebody was, maybe I think Manisha ma'am or somebody were telling that okay, the averaging point. So if some stock is already going down, so better either we can exit, or if we wanted to wait, so maybe we can just wait. Okay, rather than putting some more money into the kind of a stock which is already going down. So that is not the recommended way to do the trade. Uh, so either we can do the exit, or maybe we can just wait for some more time. Exit is the best option. In general, what I would recommend that okay, any stock which is which fell down maybe a nearly 20% of their top, or from where we have invested, uh, I would recommend exit from there, unless and until it is a very outperformer in the past or very blue chip company. So if it is a blue chip company with some very good past performance, maybe something happened momentarily, maybe that particular type of company we can wait. But in general, from the tech analysis perspective, it is recommended that any stock or any trade which is uh, you know moved down more than 20%, we should be exiting immediately. Okay. The next point again, it is related to the earlier one. Be a sniper trade. Sniper is like a, so again is a keeping a eye. So snipers, if we have watched a lot of movies, so we know that okay, they are sitting with their long range rifle and putting the targets, aiming the target and just waiting for the a right moment. Right moment could be the instruction from the senior officer or something else. So they wait for a long period of time before taking the shot. So same thing is also applicable concept in the stock market also, right? We need to wait and wait to see wherever there is a clear sell signal or where, okay, and we need to wait again when there is a very very clear buying signal. Okay, and those signals will be there in the chart. Okay, so rather than um, you know floating in the emotion to take the trade, because when we start into the trading, the mind will tell us, okay, yes, take, purchase something or sell something, right? But the best option recommendation is just wait for the right moment, and till the time by the time it's mark it shows that, okay, yes, there is a certain indicators which we are going to implement. I mean, we have already learned, it is just matter of, okay, how to use them. So wait for the right moment to take the trade, either to purchase any stock or sell any stock. Next one again, don't follow the crowd. Okay, so crowd, here is the difference between the crowd and the forces. So for example, there are, let's say, 100 traders are there in the market. So however, there will be only one person who can able to drive the market because he has a lot of money, or the so that with that he can influence. So there's a difference between the forces and the crowd. Crowd may not be the always the decision point. I mean, there are in some indicator where we keep one of the indicator as a volume, but again, volume is not directly proportional to the crowd. Volume may come out of one individual also. So rather than the crowd, we are looking at the volume, and volume is based on number of trades that is being executed, right? And the last point of this page is markets are never wrong. So when I say market is nothing but the chart. What is displayed as the chart, that is the ultimate truth. Opinion may be wrong, or I can say opinions are mostly wrong. But whatever is reflecting on the chart, that is the ultimate truth. Okay, few more points before we finish. That, okay, don't. Uh, I think this point we have already discussed, but it is worth repeating it. Don't buy any stock because you think it is cheap, right? I think yesterday I was giving the example of Yes Bank. So when it fell down from 242 rupees to 80 rupees, even my college friend, he purchased 3,000 stock or 4,000 stock. Okay, and now it is trading at 10 rupees or 20 rupees, right? So it is, I mean, as per the tech analysis, the system, it is, if it is fitting into that one, then no matter it is cheap or costly, you can purchase it. But but if because it is cheap and that is the reason you are purchasing, that may not be the recommended way to do that. Okay. Um, right. Never let speculative play, like for example, rumors turn into the long term investment. So um, again, I mean, I think I have the same SBAN example once again, that, okay, there was a rumor or the news that, okay, S Bank is going to acquire by SBI, and because SBI is the government organization and the big bank, nothing will happen. S Bank will bounce back. Until the till date, from 242 rupees to it is keep on falling, but it never bounced back. I mean, if there will be any opportunity of bouncing back, then it will reflect into the charts, right? So rather than looking about, okay, who is backing that particular company or who is doing some investment, we should be always relying on our learning of technical analysis for any trading or any investment. Right. Yeah. So the triple screen or double screen system, which we have already, I mean, yesterday we have already discussed, like tide, wave, and ripple. Based on that, we should be analyzing the chart. And again, repeat, never fall in love with a stock. Okay, it could be anything. It's a Reliance or Adani or TCS or Infosys. So from the when we are trading or investing, it should be based on the system rather than based on the our liking. Okay, let me put my charger. Just give me a second. Yeah. uh, and the habit of managing money, okay, is more important than the amount, right? So managing money, what it means that, okay, how we are distributing the money into the different portfolio, here percentage or stop losses, or the risk, etc., right? And last but not least, never compromise with your money management rules that we have already learned about money management rule, like a percentage distribution and the risk. So I will take a pause here for a minute or so. Is there any question or any opinion or any pointer someone wants to share at this moment? Please feel free to share. uh, Anything, anybody wants to share, or is there any question? Feel free to ask before we.
I could not understand. Always use the triple or double screen system while analyzing chart.
Sorry, Manisha ma'am, come again.
The fourth point on this slide.
Okay.
What does it mean?
So I think yesterday we were discussing about the triple triple screen system, right? So like looking at the longer term view, like a tide, wave, and the ripple part. So there is a again, this part we are again going to discuss. Triple screen or double screen system means that whenever we start analyzing the chart, we should be first looking at, for example, the MACD, which will give you the long term view, what is happening. And then the next level, that, okay, even the long term view, it is market is going up or down, but what is happening at the moment when we are planning to take the trade. So that in that case, we need to be looking at the second indicator, like uh, maybe RSI or a stochastic. So that is a triple screen system. We will be again discussing this triple screen system, okay, by when we are looking at the, I mean, taking the exact, I mean, actual sample trade based on the charts and some particular time frame. So I think that will add more clarity. But in short, triple screen system means that there are the uh, different indicators we will be analyzing, and those indicators will be based on the long term view, on the current moment view, that is called as the tide, wave, and ripple. So tide and wave is a two combination, that is the double screen, and three indicator is called a triple screen. So three different parameter, either two or three different parameter we will be analyzing before trading the trade, and that is called that a double screen or triple screen system.
Thank you.
Yeah, you're welcome. Um, So before moving for so few more pointers, like developing the trading strategy. So focus on three mantras and 3M we have already discussed. And in brief, those are the method, like identify the methodologies that works for you. So we have learned, maybe I can say many things, maybe 8 or 9 concepts. So at any point of time, uh, combination of few concepts we are going to apply, for taking the trade. So depending on, who you are means, either you are a day trader or positional trader or long term investor, or maybe your preference is to trade in stocks or in index, or in a commodity or currency or something else. So depending on your choice of the stocks, maybe a certain set of, I can say, combination that you will be using. You see, it's like um, in an individual kitchen we have all the ingredients, but at any point of time as an individual, we should be cooking different recipes and different ingredients we are using. Okay. So but but most of the kitchen, especially Indian kitchen, ingredients are more or less same, right? So depending on what we wanted to cook, we can utilize those ingredients and cook for that particular day. So similarly, the methods are also like so depending on uh, okay, what is going to work for me or which taste I will prefer for that day, those combination of the concept or indicator we will be choosing. And then identify high probability setup. Okay, so high probability setup means again this is the same thing that okay, which combination is working for me best scenario on my selected stock. So once we do kind of a little bit practice, it will be that for an individual level, it will be clear to you that okay, this is the setup which is working for me. And then whenever I wanted to trade, I need to wait for that particular setup to appear in the chart, and then I will take the trade, right? And filter the setup based on the there's a double M is the money management. So whatever is the setup that I will identify, I will validate or filter it based on my management rule which I have created for myself and then trade accordingly. And what is the money management one? The few uh, highlights that we need to remember that can identify your risk appetite. Okay, so this is again very very interesting one, which is again based on my own experience. See, sometime so individual risk appetite, for example, it will be different for individual people. Maybe somebody uh, who has a big pocket or very good experience, and for that particular person, even uh, some lakhs or more than couple of lakhs also on the risk, they can able to sleep peacefully. For some person, maybe it is 100 rupees or a few thousands also on the risk. Maybe they may not able to sleep properly because market, closes 3:30 or even by the night. And if they are still into the trade, it may impact their sleep also. So what I'm trying to say here is, put as much, put only that much money into the stock market, or put only that much money into the risk with which you can sleep in the night peacefully, right? So um, that is the definition of a risk appetite. Okay, so and to start with, somebody maybe if you have not practice about that, okay, plus and minus. So start with a small amount and think, okay, can you able to, are you uh, uh, able to sleep peacefully with that risk? So if yes, then okay, you can take the trade and leave for overnight. Otherwise, take the decision for that day. And maybe over the period of time, once you have the more confidence, and that okay, maybe tomorrow you have taken the position trade, and there is a certain point of time it may go to the other direction, but you are confident on your system or the analysis that okay, no, um it has not hit my stop loss, and I can wait till tomorrow, I can sleep with that risk, then go with that. Otherwise, my recommendation will be, um, practice it, okay, with your limited investment in the stock market, and then uh, kind of go through those emotional those plus and minus emotions, okay, and then be kind of a friend with those emotions, and then increase your investment slowly rather than putting a big money in the first day and then losing your sleep in the night. Develop a money management plan. Okay, so a high level plan I have already shared. But on top of that, if you wanted to maybe have some additional money management plan rather than maybe putting, for example, you know 2%, you can decide, okay, I will put only 1% of the risk. That is also good idea, right? So but whatever the recommendation is there for the to start with, it should be within that limit. Okay, so it will be a safer trade. I mean, it will be more peaceful with your trade, right? Few points related to the mind management is that identify your personality. I was mentioning earlier that okay, who you are. Maybe for somebody who is very okay with that, okay, I will invest some amount maybe in the morning, and I will exit by the end of the day, maybe with couple of thousand or couple of hundred profit or loss. I'm okay with that. So okay, So you can choose to be day trader. Somebody is positional trader means that okay, the person is investing for few days to few weeks to few months. Okay, so taking the position. Okay, this is my setup. Once the market will start moving as per their setup, or that indicators are reflected in the chart, then I will take the position. And after a certain point of time, whenever the market price point or indicator will be XYZ level, I will exit. So that is the positional. The day trader means you are exiting on the same day. Positional means for a few days to few weeks, or maybe somebody is a medium or long term investment. Maybe for depending on a simple moving average or exponential moving average, they can take the position of the long term. Okay, so it is very important to identify your personality, and maybe for learning purpose, you can have a you can wear the hat of different personality on different day. Maybe someday, if you are free, if you wanted to try the day trading, you can do that. All right, there is nothing harm. But over the period of time, you will understand that okay, who you are. Are your personality is more suitable for day trader, position trader, or you are very much comfortable for the long term. Okay, but the concept is not going to, the concept will be the same. Only the time frame is going to be different depending on your personality. Day trader means the hourly and minute. Positional trader will be again maybe a 4 hour to daily, and medium or long term investment would be the daily, weekly, or monthly chart. Right, and again, whatever the rule of the game that we have discussed, simply it is recommended that follow the rules. Okay. Uh, so just before we close for the today, so this is, I mean, today we are going to cover up the theory. Tomorrow, we will be directly looking on only the charts and the some sample trading or example trading we'll be doing. So these are the last my personal what the lesson that I have learned. Right. So most of the time when I lost the money, it is only because of that I compromise my own rules and system. Like I learned that okay, I should not be taking the trade whenever I will make a profit or I will lose the money. But even after making the money, whenever I enter on the same day, then did, I lost the money. So after maybe a year or so, then I have made this strict rule that okay, no, whatever will happen that day. I mean, sometime I hold my one hand with my other hand. That okay, no, this today I will be not trading, entering the market second time. All right. So the learning is same. Okay, create your own rules as needed, and simply follow the rule, follow the discipline, and that's all. And they repeat the same thing. There is nothing beyond that. Okay, so creating the rule and following the rule. So yeah, so I have again taken maybe few minutes extra, but uh, today I have covered the kind of